What's going on YouTube? Welcome back to my channel. Today we are diving into a topic that has been making headlines, and that's the ongoing tariff war initiated by Donald Trump on China. Specifically, we will explore why this trade conflict may not have a significant impact on us here in Australia. We will dive into recent export data and examine China's strategic pivot away from the US over the past few years. And the biggest question, how will the Albanese government navigate these turbulent times? Let's start with the basics. Tariffs are taxes imposed on imported goods, making them more expensive. Governments use tariffs to protect domestic industries from foreign competition, reduce trade deficits, and pressure other nations into favorable trade agreements. Essentially, it is a strong arm tactic. Now, we all knew Donald Trump planned to impose tariffs on China to protect US industries and address the trade imbalances. These actions will disrupt global supply chains, increase production costs, and contribute to the consumer prices, which are always rising. But now, with the counter-attack tariffs we are seeing from China, it remains to be seen how it will strain the international trade relations. Let's bring it back here to Australia now. China is Australia's largest trading partner, accounting for over 30% of our exports, including iron ore, coal, and agriculture products. And the United States ranks as our second largest trading partner, with strong ties in services, technology, and defense. It came as a shock that Donald Trump would impose a global tariff on steel and aluminium on America's closest allies. And the Albanese government is now negotiating with Trump to secure an exemption for Australia. But I'm not sure how that's going to go, as senior presidential advisor to Mr. Trump, Peter Navarro, accuses Australia of killing the aluminium market. Now, we put this into context. Australia exports approximately 1 billion steel and aluminium. And in terms of metric tons, the amount of aluminium Australia has exported to the US over the past decade has fluctuated from a low 22,500 in 2016 to a high of 210,000 tons in 2023. Australia's export to the United States in 2023 was valued at approximately 12.5 billion. While this is a big figure, it represents a very small portion of Australia's total exports. Australia's total export in 2023 was 374 billion. This limited exposure suggests that US tariffs are unlikely to have a substantial direct impact on the Australian economy. But that doesn't mean we shouldn't be concerned. While Australia can look towards other buyers for steel and aluminium, it will always come down to the price, and that may not happen overnight. With that said, Beijing has prepared for another Donald Trump term, as there are no dummies in Beijing. The Chinese are entrepreneurial, so plan to soften the blow of US tariffs has been in place as China pivots towards increasing its trade with BRICS and the Asian countries, particularly Indonesia. With a population of over 282 million people, Indonesia is considered as an emerging economic powerhouse. So there are plenty of opportunities for China to build onto that relationship. Looking over the past 3 years, trade between China and the United States has experienced a notable decline. In 2022, US goods and services trade with China totaled approximately 758 billion, with exports at 195 billion and imports at 562 billion. By 2023, a total of US-China goods trade decreased by 17%, with US exports falling by 5.1% and imports falling by 20.4%. China is on a mission to diversify its trade relationships to mitigate the impact of US tariffs. Increasing trade with BRICS nations and other Asian countries could help China maintain its economic growth. This downward trend continued in 2024, with monthly trade values fluctuating between 50 billion, indicating a sustained reduction in bilateral trade. These countries are battling it out for global superiority, but China's forward thinking and strategic move to diversify its trade partnership is proving to be beneficial. Given these dynamics, Australia's direct exposure to the US tariff war is limited. However, it is essential to consider indirect effects. Tariffs can increase the cost of imported materials and affecting industries like construction and manufacturing. Global trade tensions lead to economic uncertainty, influence investor confidence, as well as foreign investment inflows. It is going to be crucial to stay informed and adaptable. So let's look at the risks. Well, we can suffer a double whammy where both property values and rental prices increase as supply level shrinks due to affordability. We also have all the other factors currently affecting our markets like population growth, labor shortages, and the existing cost to build. Not to mention variable rates still hurting borrowers' pockets. In summary, while the US tariff war has significant global implications, its direct impact on the Australian market is relatively minimal due to our limited export exposure to the US and also China's strategic diversification of its trade partnerships. Nonetheless, staying informed and working with strategic professionals that know how to navigate these crazy economic times is crucial. If you have any questions on how to build your property portfolio in these uncertain times, reach out to my team at Empire Property to book a consultation. And also don't forget to comment, like, and subscribe. I'll catch you in the next video.